All right. All right. I think this thing is working. That is, and it's in excellent condition. Oh my god, this is heaven. I think I figured it out. I think I finally figured this thing out. All right. Ted here with Bodies and Wicks, and I made a call yesterday, and we're gonna take a close look at it because I think it's about to happen. So, but before you get too far, I want you to do something for me, please, and that would be to go ahead and smash that like button if you want. Hit the subscribe button. We're gonna learn about some smart money today. And yeah, let's jump right into it. I want to get over. Oh, yep, this is exactly what I thought would happen. All right, give me 1 second, guys, because evidently not everything was perfect. But I was close. I was really close. Hey, at least I got it working, right? I never thought this day would come. Hold on, I'm fixing it. I'm getting ready to show you the chart of Bitcoin, because as of last night, I said it was gonna have one more drop, and it's looking like it's dropping now. And even though, yeah, hold on 1 second. No, hold on. Click over to this guy and then click over to this guy. All right, now we can see. All right, hold on 1 more second. I'll keep you entertained, I promise. Just give me a second. Let me get this up and going. All right. Come on now. Come on. Where you at? There we go. There it is. I think I found it. Well, that was supposed to be it, but hold on. Oh, this is annoying. Don't you love it when you check everything ahead of time and then you're finally alive for like the first time that you can remember, and nothing is gonna go your way. There we go. All right, it should be up on the screen now. And yeah, this was the call I made yesterday. I said, and if the thing is that I had the reason I'm actually able to go live right now. I may still be. I don't know. It looks like it's saying I'm not receiving enough video. Just come on. I literally have my network cable plugged in my computer. I got an adapter just for that, just so I could stream live. I don't know what else you want from me, YouTube. I really don't. I've got my settings exactly the way it should be. And it says YouTube is not receiving enough video. I don't know what you want from me, YouTube. I really don't. But so far it's working. So we're going to go with it. It may look like it's going to be a little laggy. But hey, at least we're going. So, anyways, what we're looking at, what we're going to look at. Of course, my internet's being slow. Yeah, I kind of figure it would be a little slow. But I need to close the watch list because nobody cares about ARK, except for me. I care about the ARK ETFs. But we're going to do... Go to my profile. And I want to show you what I called last night, and then we're going to go back to Bitcoin. Because we're going to see if this actually happens. Because I think it is. I think it's going to happen. All right, so here I have my Bitcoin to have one more fall to end the month. Of course, this is all projected by smart money theory. Now, how did I come to this conclusion? Click on it, and I can kind of go through it. But basically, if you were to look at the monthly candles right now, all right, so September is a down month, so it's a bearish candle. Then you have October, kind of exploded, and then now you have November. It's coming back down. Now, what it's doing is it's trying, even though it's monthly, it's trying to rebalance on the monthlies, right? So it's trying to, you get a monthly here, which would be the October one. November is going to be up here. It's trying to come down and touch the September. That way there's no, what we call fair value gap in the middle. And with all that, I have it on the daily, so it's probably not going to move that well when I hit play, but you'll be able to at least see what's, I guess, happened so far. And the reason I chose this entrance is because it has to do with the breaker that's over here. So if we look at it in a weekly perspective, there is what we call a fair value gap. Now, that fair value gap is that gap I was talking about, except for, in a monthly time frame. If there's one left in a monthly time frame, they usually try to close up. That way there isn't a gap there. If there is a gap there, it usually tries to come back and retouch it, basically. So, as of right now, yes, I know you use cookies, you dumb thing. So, as you can see here, the weekly fair value gap is right there from this one to this one, right? And then on the daily is basically the wick, it looks like. And that is going to be your breaker, right? And that is the reason I think it's going to fall back down into here, because even when it fell, it touched right on that top of that monthly fair value gap, right? So even though it touched right on top of that monthly fair value gap, what it did, it created liquidity, basically. So because you have equal lows sitting here, right? So we have equal lows sitting there, and I go ahead and talk about it. So, it could be possible to reach as low as the breaker, but if it gets, and I may even leave a little bit more room at the bottom just in case it tries to spike through, but I don't think it will. But if it does, then what's probably going to happen, it'll float to the bottom of the fair value gap. Okay. And reason I can attest to these kind of things is because if you look at the monthly, we're going back to December last year. We're going 12 months here. If you go to December, look at January. Look at January's fair value gap. So the barely any wick here in December. and then it shoots up, but comes back down. But still, I mean, in February, it doesn't retrace much. It doesn't retrace to close that gap in between the 2 months. So therefore, you basically, this is what we call an imbalance in smart money. And anytime you have an imbalance, price is always going to try to come back and find that imbalance, right? So as you can see, when we came up, we made that the top in May, somewhere what was like 64,000 or something like that. I'm not sure what it is. But then, we came down and we had the fallback. And then we came down. I don't really know exactly how it went. But I do just remember May, everything just come crashing down. So in May, everything in crashing down came all the way down. It almost hit the bottom of the monthly fair value gap of January, right? And then moved over, to June. June was also not such a hot month, but as you can see, we had another almost bottoming out of that fair value gap. And then it wasn't until July, when July finally decided, because remember, I kind of just made this arc over, and then once at the bottom, then it just kind of took off. And that's what kind of happened. And then we had August, which is interesting. August, the body of the August candle is actually, it's just basically the whole of the fair value gap that was formed from April to June. There's a little bit of space there, but not too much, which is really interesting how that body of that candle just fit perfectly in there into that fair value gap. And so now the fair value gap has been held, right? It pulls back, decides to move up, and then see, this is here. This is September, right? And then we get October, and now we're in the month of November. Month of November is pulling back, and this is why I said I thought we would have a little bit more to fall. Now the top of November, I forgot where did I say it was. That line is 52.9446. That's the top of November. I don't think we've reached that yet in Bitcoin this month. So no, we haven't. 52.9446. We have gotten to as low as 53. So I think we're going to come down and we're going to hit that imbalance, which is, well, I think right around in here. But I looked for the daily. I personally think it's going to enter the breaker, which is a little bit below. I think that's what this white line is here. That would be the imbalance from the monthly prior in September. And then here we have the daily order block, or the daily breaker. Now, what is a breaker, you ask? If we go to the daily right now, that's not one of this. Okay, come on now, buddy. There we go. All right, perfect view of it. All right, so pull us down just a little bit. What you have in this situation, how a breaker is created, is you have a low, a high, and then boom, a lower low, right? That is what creates a breaker. This is all part of the algorithm that goes into smart money, right? So now that you have a breaker, because one of the reasons you have a breaker is because right through here, that during this 1 week, everything just kind of went right through it. Even the daily, like the daily even never came back and has touched this. Now this is what is going to be act as your, a lot of people, you will use this as, support. And this is exactly why. And it has nothing to do with, hey, this is where, it touched, and it stopped here. So therefore, this has to be, the support level. No, it's the reason it's the support level is because there's a breaker there, and because you have this lower low formation, which tells us that the institutional players, which is what smart money is all based about, right? The institutional players, they pressed up hard. And then so they could get everybody to buy. Everybody chased it. And as soon as everybody chased it, they dropped the bottom out and sold. Now, what are they doing? They're still holding these buy positions. Even though it went all the way up through here, they're still holding the buy positions. They have those deep pockets. Or, sorry, not buy positions, sell positions whenever they dropped it. I mean, you can see this candle, this one daily candle has dropped it this far. I don't even know how much percent that is. It's got to be a pretty decent percentage, at least 4 or 5. 19. Okay. Wow. Okay. If one daily if it's going to drop 20% in a day, right? You got to have a lot of force behind that. You got to have a lot of market making power behind that, right? So the people that decided to sell sold hard, and they did it on purpose, right? So, and they're still holding those sell positions, even as it even rises up and makes a new high. They're still holding those sell positions, and once it comes back down, I mean, because since they pushed up through here so hard with those buys, they still had to have those sell positions on hold. I mean, I guess like in theory they could have let them go, but more than likely they still have the sell positions being held, and that's why they're bringing it back down to the breaker, right? That's why we call it a breaker. It has nothing to do with actual support or resistance. It has to do with the institutional players who sold off so hard that are still holding those sells. They want it to get back down to this area so they can release the sells and then buy. And then after they buy, then we see it move, right? So that's what we're looking for. And that's what I said last night. I said more than likely what we're going to see before the end of the month is that we will see, let's do this. Because you had it, I saw these two lows right here, and I thought that was ripe for going down through it. Why? Because that means there's liquidity here. This is going to trick a lot of non-institutional players, a lot of retail traders, into thinking that this is actual support. So whenever it came down, and it came down hard, a lot of people were probably buying at this green line right here, being like, hey, this, there's support in this area, so I should probably be buying. And what did it do? Boom, right through it. Took out everybody that was retail buying, trying to catch the bottom, and took them out. Now we have one, boom, two sets. We have it again. It's efforts on a smaller level. What's happening right now? It's falling. Right? It's falling. Looks like it caught itself. It may have hit an order block. What is an order block? All right. An order block is going to be your last down candle before your up candle. And your up candle has to close above. Or a series of down candles and up candles. So you have right here, this is where it's all taken. This is where it all is. And the algorithm remembers the price, all right? Look perfectly. That is your last 2 down candles before 2 up candles. And those 2 up candles close above the 2 down candles. So that would be considered your bullish order block. Right? And even before that happened, you had this down candle here. Oops, close that. You had this down candle here, and then this one stopped right there and then came up, and I was like, oh, it made another one. Everybody was thinking that this was going to be a second support line, I guess you could say. And it did not happen. As you can see, it pulled up. It probably got people buying, and then boom, came right back down. This is what smart money does. This is what the institutional players do. They get you thinking that there's an actual support. Nope. Boom, they take it back the other way. They probably take you out with buy stops. And then this one's going to be moving up. As you can see, right now I'm on a 15-minute time frame. What I'm going to look at is the fair value gap that it left on that drop. Why? Because that's where more than likely it's going to enter and then drop again. So, oops. So right here. So from this candle to this candle, here's another fair value gap. And we've already went over monthly ones. We've already went over weekly ones. Now I'm talking about a 15-minute one. All right. 15-minute fair value gap. I guarantee you, as soon as this guy, that's what this big, rectangle right here is for. This is a 4-hour fair value gap. It enters it, and as you can see, it only gets so far in, and it looks like it's going to be, doing this kind of trend, but it never. And this guy closes up. These runs, these liquidity runs, get people that are trying to go short and take them out, right? And so hopefully by the time they get back over here, now they're going to be questioning going short, because it looks like it's going to be going up. So it's getting a lot of people thinking that, it's going to be, going up. So a lot of people are buying now. They've got people on the buy side rather than the sell side. People thinking it's going to be on the buy side rather than the sell side. But it never closes above the wick. This one, even worse. These candles, they don't close above. So now you can see it start falling. You can see it start kind of like crumbling down, basically. Look, even when I was trying to come back up, it didn't even catch the full. It actually didn't even get to the fair value gap. So it looks like there's a breakaway gap here. Breakaway gap is when you have a fair value gap and it doesn't actually make it to it, and it still continues to fall. So now what I'm looking at is I'm looking at these guys over here, these two almost equal lows, and seeing all the liquidity here. Everybody's probably got their, the reason I say liquidity is because a lot of people probably have their limits set right there, right? So whenever they have their limits set there, their buy limits, as soon as it gets to that area, I'm going to assume most people probably put their buy limits probably in here, right? And then what they do is they put a short stop loss. They think it's not going to go much farther down, and they'll do something like this. I'm going to change this up a little bit, this rectangle, make it a little bit different color. All right, so this is what most people do. This is the retail way of thinking. Okay, so you can see they probably have their buy limits set somewhere around in here. Wherever this is what? Here, I'll just see on the box. I'll just double click the box and give you the coordinates. 53777 or 5366 something, somewhere around in there. I would assume people would probably start putting their buy limits, and then they'll probably put their stop losses just below. You know, it's what you're taught, right? It's what you're taught as a retail trader to do, right? What you're not taught is, hey, there's this thing called a breaker down here that it could possibly fall to. So don't think that this is an actual safe space for you to buy. That's what you're not taught, and that's what smart money teaches. Smart money teaches, hey, be careful with those double bottoms, because more than likely it's going to go through it, especially if you do with the top-down analysis like I did and saw on the monthly that the two monthlies haven't or I would say the monthly from September hasn't touched the top of monthly of September, hasn't touched the bottom of the monthly of November. Now it can, and it's probably going to, as soon as it comes down and touches this breaker. It's probably going to come down here and touch. I mean, and then the 2 months are balanced, right? There's no need to come back and try to fill that void, right? Which gives December a very, very, very bullish possibility, right? And that's what I'm hoping for. And people, and I hate it when I see people like freak out and be like, oh my God, Bitcoin is falling, the whole world is going to end. And it's like, oh, face palm all day, because they just don't get it. They don't understand that it has to balance. It needs balance. If it doesn't have balance, then what you're going to have is you're going to have a runaway Bitcoin, right? That's going to go up to $150,000. Yeah, would that be awesome? Yeah, that'd be awesome. I'm not going to lie. But guess what you're going to have right after that? A huge crash, right? You're going to have a huge, huge crash, and people are not going to know when to get out. They're not, but if we have something like this gives us way more information that this is way better, because now that we know we don't have a monthly fair value gap to worry about it coming back in and trying to get into that, fair value gap, then we know that then December would be a bullish month. And that's what I'm hoping for. But, it just made it, it's trying to get back up in there. It's probably going to take some time to develop. But like I said, more than likely, we're going to see Bitcoin come down and fall back into this 52,800, something like that. All right. Now, that being said, what else is going on? Well, if Bitcoin is doing this, why don't we check out let's check out Ethereum. Why not? Right? Because Ethereum, it's, I want to say its November candle is actually green. I think it's a very, very odd. It's a little bit different, because I know it gained ground on Bitcoin for sure. And of course, my stuff's just being very, very slow. So hang tight. And actually, one of the things that may be slowing us down so much could possibly be my. Hold on. Nope, didn't mean to do that. There we go. I'm gonna hide myself. Okay, guys. Boom! There I go. I'm off the screen. Now you don't know I'm here. That could possibly be what slowed us down a little bit. But, anyways, all right. Now we're in Ethereum. See that this is one I think I did make somewhat of a call for. And I checked out the monthlies and the weeklies, and the thing is that they're all balanced. Maybe not the monthlies. Let's check out the monthlies on this guy. I'm on ETH perpetual contract on Bybit. I'm guessing that's going to be good enough. I usually use Coinbase because that has the most users. But all of my markings are on it, and it'll probably look really, really ugly. So it might be good to get a fresh look at. Oh no, it is a red month. I think maybe recently it just turned itself into a red month. So we come up, we have this high. Is that the all-time high? That is my question. I think so. Well, I'm on Bybit, so evidently Bybit has only been trading for about a year with these guys. So, and that's why I typically use Coinbase. So let me check out ETH USD on Coinbase. It's gonna have all my notes all over it, so it's probably gonna look horribly ugly. But bear with me, guys. Yeah, okay. So we did make an all-time high, and look at this. This is what I'm talking about when I talk about balance. All right. Yeah, there goes. There went all my notes. But here, I'll just hide them all really quick. Okay. So this is the balance I'm talking about. How you have this candle coming up here, and this candle right here touching, right? That's the balance. Now, there may be a little bit of a gap here, but guess what? You already had these two candles coming down. That just means that this candle right here is your order block. That's your monthly order block. Boom. Oh yeah, it's gonna do that, of course. But if you were to run a line from the body of that month, right, of June, run it over to whatever month that is, September. September fell back and hit what we call the bullish order block, right? So since it did fall back and hit the bullish order block, that is enough to, it does, like I said, it doesn't have to always, complete the transaction of enclosing that fair value gap. But as long as it comes back and hits that bullish order block, that's all it needs to do. Because then once it's that bullish order block, especially on a monthly basis, that's what, so you can see it come down, go boom, hit it with inside of it, and then it turns around, and that's when we had that explosive October month. That was so great. And then boom, at the beginning of November, we had that all the way up. Now it's pulling down, and it looks like it's already touched and enclosed itself, or made sure that there was no gap there, right? But it could fall all the way back down to the body. That's what I don't want to happen, but that's what possibly could happen. So I'm going to look for the weekly to see if there's anything on the weekly. It looks like all the weeklies have balanced as well, except for this guy right here. But look, actually this guy right here. All right, we're getting ready to see some ugly lipstick all over the place. Yep. Get rid of some of this stuff off of here, because some of this stuff does not belong here. These guys, I think I was measuring like the quarters, so we don't need all that stuff there. What bar does this belong to? There's a daily fair value gap I marked. I don't know. I think it's this guy. Oh, there it is. Okay. That's what I need to get rid of. There we go. All right. So here we have a weekly fair value gap. Still hasn't come back and touched. Oh, it looks like I already made one for it. So I didn't need to. I did not need my new one that I just made, but there was one for this week to this week. Now, what happened is that it did come back and enclose that fair value gap and then take off. Look at all this. I get way down in here in like the 15 minutes and start making all my notes. So I apologize if all this is a bit much. It is. But this is how I do my charts. When I do high time frames, you're gonna see all the little 5-minute time frame stuff I've put on there too. But I could probably just get rid of all of it, because at right now at this point, none of this matters. What matters is the larger time frame stuff. At the time when I put all this stuff on here, these things mattered, but not right now. There we go. Clean this up a little bit. I told you you're probably going to see a lot of chart stuff on here. All these lines don't matter anymore. Oh, cancel. Cancel. I'm just clicking and deleting. That's all I'm doing, so we can get a little bit better of a come on. Liquidity pool, sell side liquidity. Okay, that stuff can stay because that might be important. These are 5 and 15-minute fair value gaps that I put in here. See, and all these like other little things probably mattered at the time. Probably gave it a little bit of a pushback or something like that. But none of this right here matters. Come on, get off of here. Okay, I think we got all of it. Sorry, I thought I heard a weird noise in the other room. I'm home alone, and I get scared. No. All right. So, Jesus, come on. A daily bearish order block, which would have pushed it down. Daily bullish order block. All right. Daily discount. Nope, not anymore. I think that would have worked. I think that was working whenever I was doing something else. All right. So none of these basically matter anymore. Apologize for not having my charts clean. But at least we do have the 2 weekly fair value gaps. Okay, now we got this. And I can get rid of this guy too. Come on. I must have just put a bunch of things right there. I don't know. But it looks like here, nope. I think we had some kind of fair value gap. Looks like it was a 4-hour fair value gap or something. And look, it came in and closed it all. So we don't have to worry about that one anymore. So again, these are all balanced. I don't, even though this one is unbalanced, it looks like probably on a monthly, it probably would have, yeah, look, you can see it right here, this candle right here. These 3 consecutive candles right there is your bullish order block right there. And now you can see that, yep, that's why I have that big white line. That was the line I drew out earlier. Comes down, touches it, boom. All right, take off. So it's not going to come down for this fair value gap, even though there's still an imbalance down here. Imbalance was saved by the bullish order block, all right? So what is Ethereum up to now is the question. Well, it looks like this right here would have been the bullish order block for Ethereum. Why is it just keep, what did I do to make you come up? All right, get out of here. All right, so meaning I'm going to draw this guy top of here over to here. Yep. So 3 consecutive candles down, 4 candles up, close above. That creates a bullish order block, right? So what is it going to do once it gets above? It's going to come back down, back into the order block, and then now that it's in the order block, now generally, you know, the worst that'll happen is it'll get halfway through the order block. On a huge time frame like this, it probably, you know, it generally touches the surface of it and then it takes off. Since we're on a weekly right now, if we were to look on the daily, it's going to look a little bit different, but you'll kind of see how it all played out. Boom, drop here, look at that, and then pulls itself back up. What's it do? See this fair value gap right here? Stop moving. What are you doing? All right, see this fair value gap right here? I'm going to guess it probably got about halfway through that fair value gap. I'm going to draw it. So there you go. Oh, maybe not even halfway. But these fair value gaps, right? Like I said, they act as magnets. Act as magnets to attract the price, and then boom, it's almost like as soon as it gets there, you turn the magnets, you know, to the 2 sides that you know that repel each other, and then they repel. It boom kicks the price back out. Now, again, these act as, I mean, they're also in an imbalance, which means they need filled. So boom, it kicks out one price, goes to one imbalance, fills this. Once it's done filling this, it could take a while. We saw it take 3 months of Bitcoin filling a monthly imbalance, and then boom, right back out again to this guy, and then look, it's almost like it doesn't want to leave, and then comes back down. And then what does it hit? It hits an order block. All right, so the top of this guy here, over to here, that is your bullish order block. Why? Because that's your down candles. Even though there's a green candle in here, it doesn't matter. It's where it starts. It starts pushing down right at that point. All right. So then once it comes up, doesn't escape the imbalance just yet. So it tries to move back down, hits the bullish order block, and then it leaves. All right. And it takes a day to do so, but or 3 days to do so, but still, that's the whole point of the the bullish order block. At least it didn't pull farther back in. It could have pulled further back in down to here, but it didn't. And now that you see that we have this, this daily fair value gap, look at this. I mean, these two guys are almost right on top of it. That's like, that right there tells me that there is liquidity just below, and that Ethereum could be falling. I mean, it could be doing what Bitcoin's doing right now, and it could fall back into this fair value gap, because it has nothing to do with fair value gap at this point, because the fair value gap does have everything filled. The imbalance is no longer there, but what is there is the liquidity side of it, right? So that's what price seeks in all the time. If it's not seeking an imbalance, it's seeking liquidity. Now, why would there be liquidity here? Because this is exactly where people would have buy stops, right? Doesn't that look like support to you? Wouldn't you call that support? That's what I call fake support. Because it'll come to, because it could just drop all the way down right to here, right where these guys' lows are, and then stop for just a second, and then start going back the opposite way. You've seen it happen so many times. I know you have. And then all of a sudden, boom, it drops. And you bought, and then it goes against you and takes you out. Happens all the time, right? And that's what we're trying to, that's what smart money is about. It's trying to make you aware that this happens. And the reason this happens is because of institutional players, right? So the institutional players do have this power. I mean, the people, I mean, you're talking about people who own, I mean, and they do, all the different pools. And I mean, I wouldn't even say the mining pools, but just the people, I mean, because mining pools just mine, they sell, but there could be somebody else's wallet that has God knows how many Ethereum in there, and they could, be. They all kind of do work and congruent to make these charts the way they are, and to make you believe that retail theory is the actual way to go when it's really not. They do this so that people will put their buy stops here, and that way when it does come down, they buy it, and it does pull up, it chases it, and they go sell. They all sell, boom, and what does it do? It takes out, especially in futures, it takes out anybody who was betting on that future for a long. It takes out them and their stop loss. That money is then moved, right? So that it is lost from the losing trader. It is passed on to the winning trader, and the winning trader was the one who sold. Who sold? Smart money. The big players. Those are the people that sold, because those are the people that can control the chart, basically. So these are just things you have to be wary of, especially when it comes to majors. And they're all kind of doing this right now, making people think that it's actually going to fall, and everybody's going, "Oh my God, Bitcoin! Is Bitcoin going to be, going to be okay?" Yes, it's going to be okay. Bitcoin's going to be fine. Nobody is actually jumping ship on Bitcoin. It's only the big players that are looking at Bitcoin right now. Look, okay, Bitcoin's pulling up. Actually, I'm kind of glad I caught this. I bet it's only going to get about halfway through. Boom! Look at that, 50%. This is what it does, guys. This fair value gap, exactly 50% through. Boom! Halfway through. Now it's going to fall. It's going to fall. It's going to aim for here first. right? Because this is liquidity point 1, because now everybody thinks that this is another support area, and then it's going to fall through that, going to pull back up, and then finally possibly get through this one. And then what I'm hoping to see is that we do finally see it reach this daily fair value gap around 52 or whatever it is. It was 802, something like that. Once it gets into there, then we have the 2 monthlies are balanced once again, meaning the high of September is meeting the low of November. And then we move into December with a very, very bullish tone, extremely bullish tone, to be honest. So that's why I called for one more drop on my Tradingview on Bitcoin, and this is where I think it's going. And it looks like, anybody who was trying to bet on this going up right here, I could tell you right now it's not. And that's why I pulled out the fib, because generally it only gets about halfway through, and it did. That's what we call consequential. My mentor calls consequential encroachment. Consequential encroachment is when you do halfway, you measure about halfway of the fair value gap. And then, boom, you can see it came right to that 50% of it. And now it's probably going to wait. Let me see here. What time is it? 8 after. It's going to act like it's probably going to fight. And it may get a little bit above it. Who knows? But then as soon as 4:15 comes, I guarantee you it's probably going to move back over. So, or move back over and fall, I mean. So it's got to leave another fair value gap, right? Actually, it doesn't have to, but... And let me change the colors on this really quick just so we're not overlapping all these. Well, wrong one. There we go. I'm not overlapping all these different colors. All right, I'm going to do purple on this guy. Because then it leaves another imbalance for it to come to, right? And what it's probably going to do is it's probably going to just leave it wide open and then slam right through the bottom of it. Because that's the only, it'll probably get down to the bottom of it and then maybe pull back up just a little bit and then fall again. That's what we see all the time. So, yeah. Oh, look at it. It's kind of pulling back. But, yeah, it's going to look like it's pushing up, and I guarantee you there's so many people buying right now. They're like, yes, this thing is going back up. We're going to win. Yeah. Don't. Hold off. Do not buy. Do not buy Bitcoin right now. Don't do it. All right? If you're smart, you won't. It's going to fall again. I'm telling you. Now, again, the other things that I was talking about, looking at, of course, were metaverse coins. Another one, I'm going to get off of Bitcoin here. We're going to come back and we'll check it out. All right. But one I've actually had my eye on. Man, I'm glad that I got a part of this, to be honest. Subscription. I know I got a new subscription. Jeez, that's been a long time ago. It's when the Black Friday sale first came on. All right. Anyways, GALA. I don't know if anybody else is in GALA, but if you are, man, I love this coin. I don't care that it's coming down right now. It's gonna go back up. All right. Let's do some smart magic or some smart money thinking here. All right. So first, whenever it did pull up, right, and then dropped, right, that's where you got to think about where you're going to put your fib and how you're going to place your fib. All right, I'm going to give you a little smart money lesson here. Where you want to put your fib and how you want to place your fib. You want to get a little bit closer. Let's get into the 15-minute. Actually, I'm going to go down to the bottom of this one. And I'm going to show you why I placed the fibs the way I did. Because it worked out perfectly. Because I ended up, I first started at 16 cents with this thing. Okay, so I first bought when it was right in here. One of my friends was telling me about it, and I remember buying Mana when Mana was at 20 cents, and I sold it when it got to $1. Yeah, I made a lot of money, but man, I wish I would have held on to it. So this, whenever he was telling me about GALA, I was like, okay, this is gonna be another Mana, basically, and it could be even cooler because, from my understanding, like from this NFT kind of series, is that the items in the games can be NFT, statuses can be NFTs. Like they're just kind of making everything an NFT in the whole GALA world. So I thought this is really cool. So whenever it pulls up, right, and starts going sideways, makes a high, right, boom, pulls back down. All right, why did I measure here to here and not from way down here to here? And I'll tell you why, okay? Here, we're going to stretch it out a little bit. And it actually should be... Is it locked? Did I lock it? Okay, it's locked. It actually probably should be here, to be honest. Yes. Let me check out the other version to see if this makes any sense. No, this makes no sense at all. So that's why I did here. And I think that's why it was like stuck in between, because I probably pressed something earlier. So why here? Because see these guys right here? You have two equal highs, right? You have two equal highs. You have a low. Boom. This takes off. This breaks those highs. Now that it broke those highs, it pulls down and makes another low. That's where you want to start your fib, especially after you see a high being made, and it pulling back, because that's what my mentor taught me, to be honest. My mentor, if you've heard of Inner Circle Trader, I am going through his mentorship program, and man, is he good. He teaches Forex though. He doesn't teach crypto, but everything applies. Like I've noticed everything applies to crypto. He's so against crypto because he thinks everything's a little bit fragile. The whole time, a lot of Forex stuff is based on time first, and then the price, right? It's not based on price and then the time. So you have to watch for specific time zones. When that's when things start moving, because why? That's when the central banks are dealing out the British pound and in the US dollar and things like that. Crypto, it's completely different. There's no central bank dealing out these things. So the timing is a little bit off. It's a little different. It's there's a very rapid time when things start moving in the evenings, especially if you're in the US. And that's more of like the Asian kind of, crypto traders, the people in Australia or Japan. That's when those people are trading, because that's their trading time. We're kind of wound down for the day, but we still could be trading. There's not a whole lot of institutional trading at that time, but then again, you do have your 2 o'clock in the morning, times where not last night, but the night before, I think Wednesday night, where crypto just kind of crapped out. And, 2 o'clock in the morning is, especially for me, I'm in Central Time in the U.S. 2 o'clock in the morning is, that's the London time frame. So, London time frame. And then, also you'll see it pick back up again, around 8:30 in the morning, 9:30 in the morning, whenever our stock market, kicks back up again, because, our institutional players, have a hold of these guys as well. And then you'll see it at nighttime too, because then the institutional players from, Australia and Japan, China, of course, even though they say they're not doing any crypto, any kind of related stuff, they definitely are. I don't know if you've heard of CoinEx, but CoinEx is from Shenzhen. Shenzhen is like the Silicon Valley of China. Okay, and so that's where the actual, crypto mining, crypto trading is allowed. Is Shenzhen. Anywhere else, China's like F off. Like I don't know. I just don't get China, but they're killing their economy is what they're doing, especially since they did delisted DD. Anyway, I'm getting off track here. Let me get back on track. All right. How you place your fibs, right? You have to wait until a high is broken, right? And then it creates a low, and then wait until you create another high, and then that's how you place your fib. Because then you wait for the price to come back, and what you do is you look for the golden pocket. The golden pocket, all right, this is how you set your fibs. You set your fibs at 61.8, 70.5, 79%, 88.6%. Those are the four levels that more than likely your crypto is going to come back to. Actually, it's 4x too. I mean, this is where I got the 4x levels. So after the high, right? Boom, boom, boom. There it is. You're looking for crypto to come back into these areas. Anywhere in these areas are considered buy zones. Why? Because that is the discount. These are discounted areas. If you're going to the store, right, and you have 100, oh shit. This is a different one. Yeah, I'm looking at the wrong one. Sorry. If you have 100% off, right, that means it's free. Yay, you get to take it. No. To 0%. If it falls back to whatever this is, that's looks like it's somewhere in between, like, somewhere around 75% off. Wouldn't you buy something that's 75% off? Wouldn't you buy like a thing of cookies that's like 75% off? That was normally $1. Hey, you get to buy it for $0.25. Wouldn't you do that? Yeah, you would. So that's where the institutional money comes in and buys up again. And that's why your Fibonacci at 61.8 is so important, because that is the start of the discount, right? I mean, technically the discount's at 50%, but nobody actually uses or actually buys until it gets to the 61.8, right? So it falls back down to the 61.8, and then it takes off. You usually see a lot of movement around the 79%, just because that 80% pullback is a killer. If people want to buy something 80% off, yeah, that's when they're gonna start buying and baiting. 88.6, yeah, same thing. If it ever gets back to that point, that's where they're gonna really start buying. But generally, once it crosses that 61.8%, that's where I put my threshold at. And I'll usually put maybe like point, I don't know, just depending on lot size, I may put like 1 lot, 2 lots there. And then as we go down to like 70.5, you might want to add another 4 lots. Once you get to 79, add another 5 lots, right? Especially if this thing is bullish and is going to be considered bullish, because then you'll catch you'll catch 10 lots here, then you'll have 40, then you'll have 100, and then boom, after that it takes off, and you have just won the price. So I'm gonna actually delete this one right here. I deleted the wrong one. Thank you. Good job. This guy right here I want to delete, because I want to show you how high this one. Jesus, did it do it again? No, it didn't. Okay. So here we have another breaker, like we were talking about with Bitcoin. Hello. All right. So we have another breaker that's a 1 hour breaker. So in the 1 hour time frame, that would be your last up candle, right? I'm looking over here because I'm trying to see what kind of formation it's forming. Even though it's okay, I see why it's why it'd be a breaker. Hello, I'm kind of not in tune right now, but you have a low. You see this right here, right in the middle. Boom, you have a little low right here. So you have a low, a high, and then boom, lower low, right? So that's what considers that 1 hour thing to be a breaker. So if we wanted to put it on the hour, here, I'll show you. It's a 1 hour candle. And you can even see in here, boom, there's that low. So boom. So you take that last candle, that's, the last up candle before the drop, boom, there's your breaker. What does it do? Comes up, touches the bottom of the breaker, falls, and then boom. Now it runs right through it. Now whenever it runs right through the top of, whenever it runs right through a breaker, that's when you need to be not really concerned, but you need to start telling yourself, hey, this thing's going to come back and touch this breaker. So that's why I'm not worried. Because if GALA if it does come back and touch the breaker, then it's probably just going to turn around and take off. And that's what I'm expecting, to be honest. I'm expecting that to happen. Because this also, at the same time, let's see how high it gets first. Right. Let me get rid of this guy too, because that's going to ruin some things. So on the grand scale of things, this thing gets to, what is that, 262%. So your extensions are also important when it comes to your Fibonacci. So think about this. All right. So it's always going to be your 27%, your 50%, and your 62%. Right. No matter what stage. Right. So this is what we call, standard deviations. So once you go from, and I put negatives in here, and the reason I put negatives in here is so I don't have to actually click on this. Oh, I meant to do it. Click on it, and then where you go to Fibonacci and it says reverse. So if we go down here and put, come on now, and you hit reverse, you don't have to do that. So that's why I put the negatives in here, so that way you don't have to do the reverse. Because if you do the reverse, then it's gonna show you your extension. All you have to do is just put the negatives, and it already does the reverse for you, and that way you don't have to worry about it. So that's why I have negative 27%, which would actually be 127%. So that's the difference. Okay, that's the difference between what I do and then what I don't know if anybody else does anything different, but this is what I do. All right, so 27%, your 50%, 62%. And I was telling my friends, whenever it was down around in here and they were going, I'm buying, I was telling them, buy at 36, buy at 38, so buy somewhere around in there, and they did. I'm glad they did. And sure enough, I called it. I wish I could connect my phone to show you. I said it's going to 53. I said then it's going to 57. And what did it do? Boom, 53 cents. You see that? Or 54, I guess. But I said I was saying 53 just to be on the safe side. But hit 54 cents. What does it do? Pull back just a little bit, and then come on thing, and boom, it shoots up again, and then gets up right up to here. Is that 60? Well, I said 57 because I thought I would at least get to the 150. And then, of course, you have the 162, which is the golden ratio, right? Everybody loves the golden ratio, 162. Sure enough, boom, hits the golden ratio, 162, pulls back, boom, does it again, and then it gets all the way up to 262. Well, yeah, that would be 262. So it gets to the, I guess, double golden ratio. Almost gets to 3x, not quite. But then it has its little fallback moment. And which is why I'm not concerned about, where GALA is going. Because, I put that there's a breaker here. I really don't know if there is a breaker there. I don't think there is. I think at the time there may have been one, but I don't think the candle had formed yet. Yeah, it doesn't look like a candle had formed yet. Unless it was a 15-minute thing. But either way, I actually probably need to get rid of this because I don't think there's a breaker there. That's a huge area for a breaker. No, this is just consolidation. That's all this is right now with GALA, is just consolidation. 1 hour breaker here. Yeah, no, it's more like mitigation. So the difference between mitigation and breaker is, okay, a breaker would be a low, high, low, lower, low. Mitigation is low, high, higher, low. That's the difference. They both basically do the same thing though. But a breaker, on the importance scale, a breaker is more important than a mitigation block. More than likely, price is going to come back toward a breaker block than it is a mitigation block. So just remember that. And that's why I'm not seeing. I don't think it's going to come back down and hit this. What I put as breaker. I probably need to change that to mitigation. All right. And in that 1 hour, we do have a fair value gap. I'm going to move this because I think this is the 15-minute one, I think. And then there's also a 1 hour one. So what it has done is it did come down. It looks like it entered the 1 hour fair value gap. Boom, bounced out. What I tell you about those fair value gaps, they act as magnets. And then as soon as I get to them, they repel them as well. Boom. And then it came back down and it went through the 1 hour and hit the 15-minute. Boom, took off. And now it's just kind of hovering, right above it. I mean, I guess you could look at this and say there's like a little liquidity pool just below it. So that's what I would be worried about. Not really worried about, but if you're trying to catch a trade on GALA right now is not the best time. And reason being is that there is, some liquidity sitting here. Mainly, what it did is it faked support, right? So it's giving people the intention that there's this support level right here. Probably going to pull up somewhere. I am not sure where it's going to stop. It will probably be, it could be either these green candles, wherever the up candles are, right? So it could be these green candles. That's why you see it kind of been being pushed down, or it could actually probably push itself all the way up here. I wouldn't be surprised if that's what it does. If we see it, there we go. Boom, over here. Ugh. I'm not used to left to right mouse clicks, but for some reason I have a Mac mouse with a right mouse click, and it annoys me. I'm just used to clicking. All right, so turn this red. Turn this red, and then put negative OB or negative order block. Meaning that these two candles, these two up candles right here, those are going to be considered your order blocks. Boom. All right, so anything that up candles don't include where it starts the down candle. All right, there we go. That's going to be considered your order block. Now it could get halfway through, just like just like mitigation, or just like fair value gaps that I was talking about could get halfway through. And that's about where you want to see it get before it starts rejecting. If it's pushing up through that halfway point, then more than likely it's going to be bullish and it's going to get through the other side. But if you're expecting, and me personally, this is what I would expect. I would expect this to push up to here into these bullish order, the bearish order blocks, and then bounce down, and then get down into these fair value gaps. Let me see. Yeah, there's a little bit of opening in between these two. So I would expect it to get down into the 15-minute one. It would probably hit this 162 golden ratio, probably, to be honest. And then boom, turn around, and then finally go back up and get through the order block. But if there's one order block here, I would definitely expect it to come up, at least get rejected by the order block, come down. I don't know if the bullish order block would actually, push it along, but considering that we do have this kind of fake support, I would expect it to fall through and then take everybody that has any kind of buy limit set through here with a very short stop loss, take those guys out, and then boom, it take off, because that's what smart money does. It's looking for those imbalances and liquidity. It's looking for that liquidity that it wants to take out. All those people they're used to retail, that are used to sitting there, seeing double bottoms and double tops, and then trying to buy or sell those, and then it go against them, and they go, well, why did that happen? Because every time it does happen, it's because smart money knows that you're going to do it. It's not going to give you more than 2 or 3 chances, to be honest. It gave gold like 4 recently, and I was surprised about that. But if you have something like this, to where you have 1, 2, and almost 5 basically. Well, not really 5, because you got the down candle and the up candle. But these guys right here do have some wicks on them, so I'd consider those separate. These two not so much. So you got 1, 2, 3, 4. You have 4 chances right here, basically almost on one line. If it comes back down to it, I'm going to assume it's going to come straight down through it to the bottom, because people are going to assume that this is a strong, safe spot. It's a safe spot, right? It's a safe spot for you. It's a safe support zone, but it's really not. It's not safe, guys. It's not. So just keep that in mind. That right there would be your bullish order block. And let me turn that to a little bit different color. Let's turn this one green, because it would be going the opposite way. So that would be the green way, the Kermit the Frog way. And then I will do plus order block. All right, so we'll see if it gets rejected off of this one, and if it actually plays ping pong off of this order block and goes up, or if it doesn't, or if it goes through and down into I'm going to guess it's going to go through and down to the fair value gaps, and then push out after that. I'm going to erase the current fib. I'm going to remake a fib, and let's see what we got going on here. Okay, like we said last time, why do we place the fib here? It was because it came up, beat out the highs. Same thing here. All right. So here's your high that we beat, right? So our fib is going to come at the bottom of these guys. I probably need to turn it back into 15 minutes. It's going to be a little bit easier to see. Yeah, there it is. See, I don't know, because it is kind of snaky. And we make a high, but then we beat a high. I'm guessing that's going to be about 64% or so of that high. Watch this. Boom. Yep. So here you go. Boom. From here to here, this pulls back 64%. Boom. A little bit more back up, but it pulls down into the 70, almost 80%. Like I said, the 80% is where you see a lot of movement going. So it pulls down almost to the 80%. After that, boom, take off. And now, since that hasn't moved, that would mean this would be the new bottom for your fib. And then this would be the top. Now, as you can see, it's come back down into the 62% twice, or 60%, yeah. It's a 61.8. I always say 62 just because it's closest. 60%, and boom, inside the 62%, boom. So, yeah, it's looking like it's given us a couple different discounts already, which leads me to believe this thing could start getting heavy, and it could actually come down and hit this breaker. But I don't know. I just don't know if it will or not. I think what will happen is it will actually come up, go at least to halfway to the order block. I mean, especially now that we got on a 15-minute. Look at that. The hourly order block was one thing, but now we got the 15-minute. And the 15-minute order block is almost exactly halfway through. Let me move it, actually. Because it's going to be the green candles, not the red candle. Yeah, green candle right there. Okay. And then what I'll do is I'll do coordinates. I need these guys to be the same. Why did not happen? It did not happen. There we go. All right. Now, what I actually wonder is if we do a Fibonacci, is that going to be about 50%? Wow, right on top of it. You couldn't pay me any more to see that. Look at that. So the 1 hour fair value gap to the 15-minute fair value gap halfway through, which would be the median of the 1 hour fair value gap, would be about the 15-minute fair value gap. More than likely, it's going to come hit here. I am going to guess 76.46. So get ready for 76.46 to be the top, the next top. Don't always try to guess tops, but you know, if something like this is as plain as day, geez, I have to call it. I want to say this is going to be the next. I wouldn't say the top. I'm going to say the next top is going to be this. So we are going to write negative OB, and then also median 1 hour OB. So negative, that would be 15 a minute OB as an order block. And then 15-minute, yeah. Whatever I just said, that's what makes sense on that line, except for I should probably make that red. All right. Hopefully somebody out there is learning something today. I don't know if you guys are or not, but this is all I do. I just sit here and do this in my. This is the first time I've ever actually been able to go live. So thank God. I don't know what happened. The Lords were watching over me today. That's for sure. Because man, it's been forever since I went live. But this is all I do. I just sit here and just check out every chart I can and see liquidity, see where the order blocks are, see where the breakers are, and just move on. So if we're looking at GALA, this is what's probably going to happen. Let's go back to Bitcoin really quick. I want to see what's going on with that. Ooh, it actually did get it. Well, look, it interesting. Okay. it fell. It did get halfway through, fell. Got to the bottom. Oh, fair value gap. Yeah, remember that fair value gap I said it hadn't. I thought it was going to plow through. And nope. Instead, what did it do? It probably did a halfway thing with it. No, come on, go back. Let's. All right, so fair value gap. Almost. It reached down to almost about 50% of that fair value gap that we had left previously. Now, just because it's moving up doesn't mean it's actually going to continue going up. Not in my book. Ugh, Jesus. Why do you keep erasing the wrong things? So, I think it'll probably get up to, this 4-hour fair value gap entrance. Somewhere close to here. What time is it? 4:43 Central Time. It'll probably get close to here and then touch it, and then maybe the hour will go by or something, and 5 o'clock or something hit, and it'll hit one of these guys. Or looks like we have 1, 2, 3 consecutive 15-minute candles. So it looks like it hit probably the bearish order block already. Let me do it from an hour perspective. And then we'll see exactly where we're at with this. But I do not expect this to be going up inside of this 4-hour fair value gap soon. Okay, so it has, that's a really weird long tail. I don't like that. So we're going to go back to the 15-minute. I see where that tail comes from. It's right here. But that wouldn't be stopping it. It would be coming from the 15-minute. So 1, 2, 3 candles going up. Let me get the bearish order block drone. No, I'm doing it from the body. The reason I do it from the body, and even though it technically starts at the wick, and technically it would start here, and the reason it would start at the red candle, not the green candle, is because that's when it first starts moving back up. That's when you first start getting those buy orders in. The buy orders that push it up. Even though it's on a red candle, the buy orders can start right there at the end of that wick. Well, I have to start there, or else it's the chart's not going to move. And you have this one right here. It looks like this is the guy this is the culprit here, though. It is the green candle. It is the green candle that stopped it, guys. Even though the reds can do it, the greens did it. All right, I'm gonna look at the coordinates here. I don't know what back is gonna. No, cancel. There we go. Coordinates. All right, let me copy and paste these. Boom. All right. And what was that? 53. What was it? 54,903. All right, let's see what the high of this was. Oh, get out of my way, you stupid thing. High 54,903. Jesus. It's like right on top of it. You couldn't. See, this is why I'm telling people smart money is the way to go, because price is not random. Everybody thinks that price is random. It is not random. And this is almost exact proof as to why it is not random. It comes up, it touches that bearish order block exactly, and then pulls back. And of course, now that we have another 15-minute order block, we've just switched to another 15-minute candle. what does it do? It comes back, pulls back, hits the median, right? So actually, what is it? It actually hits the order block, which would be the top of this candle here. That red candle, that would be your order block. And actually be your bullish order block. So I'm going to style it green really quick. This is how smart money scalpers do it. I am not a scalper. I am more of a swing trader, but this is how I know that scalpers, especially from that study smart money, this is how I know they make their money. They can throw in a huge amount, as quick as they can, and then they know how high it's going to go. Why? Because we know about order blocks, bearish order blocks, bullish order blocks, things like that. And they know when to let go of the trade, basically. Sorry if I just got really loud on you there, but they know when to let go of the trade and not hold on to it for too long, because we know those blocks are. Okay, so what's the low here? The low here is 54,782. What was that? 54,783. So it goes just into that order block. Boom, turns around. I don't think it gets quite to the second one just yet. But see, this is where people are now starting to believe that Bitcoin is going to push itself up and out, and even though it did have its fall right here, right? It had that little fall. Now everybody's starting to believe that it's going to be bullish, right? I'm telling you, it's not. I don't believe 1 second it is. Well, not just yet. I wouldn't say that it is. I'm just saying not just yet. It will get bullish, but we're going to have to wait for it to clear these liquidity lows right here, right? We're going to have to wait for it to get back into the daily order block, which is back down in here, right? So, and that's why I have my trading view shaded the way it is. I called a long call right here, and I put it, here is a 4-hour fair value gap. So if it comes down and hits a daily, what we call a PD array, reason it's called a PD array is because, oh man, sorry, Ave Salazar. I did not realize that you were chatting to me. Just smart money. Here, I'll type something back to you. Sorry, Ave. Look up at Inner Circle Trader. Inner Circle Trader is basically the godfather of smart money. Except for, so what he does everything on Forex. So like his pairs are, Euro USD, GBP USD, and like USD CAD. And so I am just taking what he does, and then putting that into crypto form, I guess you could say. Hold on 1 second. Let me type it out for you. Inner Circle Trader is going to be your guide. Oops, I didn't put an A in trader, but look up Inner Circle Trader if you really want to know more about this. He is, I'm going through a private mentorship through him right now. Before I was going through a private mentorship, I was losing almost every trade call I would make. I mean, I was probably, because, keep a trading journal, please, everybody, anybody listening right now that will be listening to this, keep a trading journal. I was no more than 16%. That I think that was as high as I was getting before I was introduced to Inner Circle Trader. After I was introduced to Inner Circle Trader, I am technically not even supposed to be trading right now. What he wants you to do when you're going through his trading program is your first year is just study, right? Your first year is just study. Your second year is going to be making paper trading calls. Your third year is when you're allowed to trade, because there's so much involved in this, right? That you don't want you don't want to start trading early and start forming bad habits, in trading, right? So because you don't want to start making, bad habits or forming bad habits whenever you start trading, that's why he only wants you to, focus on the price action for the first year, right? Focus on price action on whatever you want to focus on is what he says. But, what we studied and what we're studying in his mentorship program is primarily the euro versus the dollar and the pound versus the dollar. Now, what I do is I take, and he'll tell you straight up, hey, my theory works on all, different asset classes. And I'm here to tell you he's right. Yeah, I have applied this to, you can back test and back test and back test. It works on, crypto, which is one thing he loathes. He does not do crypto at all. So it's interesting that I'm able to apply his principles that he uses for Forex on crypto, and it works the exact same. Right, so that tells you this. It's just a proof that this is all controlled. It's all controlled. All of these charts are controlled. They're algorithmically controlled, and they're controlled by the people who have, basically the biggest stake in all of this. Thank you. I just saw that you are my TA is pretty solid. Thank you. This is what I love to do. So I love to sit here and just technically look at charts and see what's going on and see what's going to happen next. I do want this to be my living. So that's why I'm taking my mentorship so seriously. And then having a job and doing this is not easy, because a lot of the trading comes, especially for Forex, a lot of the trading comes when you're asleep. That's when, your the London session and whatnot is doing its thing, and that's when you're gonna miss a lot of points. But and what I was doing is I was coming home and I was going to bed, and as soon as I got home from work at like 3 or 4 o'clock. And then I was waking up at 2 o'clock in the morning and then trying to trade at that point. And that's hard to do too. But, it's so I've learned that, there the different times that crypto, makes it seen. It tries to make it seen around now until 8 generally, 8 p.m. I am in Central Time of the United States. It also makes it seen at 2 a.m. During London. Actually, there is a indicator. If you go to indicators, and what you want to type in is ICT, and look, ICT is my mentor, and you'll find kill zones. Well, here we go. ICT kill zones, and then look, we have one for crypto markets too. So if you click on this, it'll tell you the times. Basically, it'll give us an indicator that's going to be an overlay of the chart, and it's going to show us the best times when to trade, basically. So you can see it kind of outlined in the back. And these are generally it's almost like the same times as it is for Forex as well. The only difference is this one right here, this 6 p.m. to about 10 p.m. block. this is where you know, crypto has an extra win. Otherwise, it's just these other three, for any other class. All right, so you got it from, this is showing midnight to 2. I wouldn't say that. I would say, yeah, this is off a little bit. I would do 2 to 4.